Did you know that in February 2024, Capital One made a deal to buy Discover? I'll talk about that in this video. My name is Katherine. I'm a CPA and your accounting tutor, and I help accounting majors like you through graduation and beyond. If you don't know, Capital One is a credit card issuer, which means that they make decisions about how likely someone is to pay their bills, and then make the decision about whether or not to loan them money and how much. And people can get that loan by swiping the piece of plastic that Capital One mails to them, the physical credit card. Capital One pays the merchant where people swipe the card, and the customer then owes Capital One directly instead of each merchant individually. Discover is also a credit card issuer, so they do everything that we just talked about, plus they have a payment network. A payment network is the behind-the-scenes magic of actually moving money from one person's account to another. Or in the case of a credit card, moving money from the credit card issuer to the merchant that accepted the card as payment. The two payment networks that you're most likely to be familiar with are Visa and MasterCard. I'm guessing you have at least one of those logos in your personal wallet. And you probably didn't go specifically to Visa, for example, to ask them for the card, whether it's debit or credit. Probably you went to your bank, whether locally or through the internet, and asked them to open an account. Then they mail you a card which has the logo of a second company on it, either Visa or MasterCard, that shows which payment network the card is connected to. Most businesses will take either of those cards, so if the card in your wallet has either of those logos on it, you probably haven't ever had a problem with a business not taking it. Both Discover and American Express, two credit card companies, each also have their own payment network with the same name, Discover and American Express. If you've ever seen a sign at a business saying, "We don't take Discover" or "We don't accept American Express," what they mean is that they can't accept payment on either one of those networks. That's also why Discover and American Express can get called out individually, and you've never seen a sign that says, "We don't take Bank of America" or "We don't take Capital One." Because the card in your wallet, whatever it is, says either Visa or MasterCard on it, when you swipe it out of business, that business sees it as either Visa or MasterCard, and they can process it through that payment network with no problems. Before Capital One can officially buy Discover, the merger needs to be approved by the Federal Trade Commission, or the FTC, and they'll consider whether this will, and I quote, "reduce competition and lead to higher prices, lower quality goods or services, or less innovation," end quote, all of which they're trying to avoid because it gets us closer to a monopoly. As you might remember from an economics class, a monopoly is where one firm is the only provider of a certain good or service, and since they're the only option, they can charge whatever price they want to, normally a high one, and customers don't have the option of switching to a different company for a lower price because this one company is literally the only option they have. There are a few government-regulated monopolies for things like power lines and water and sewer systems, but that's outside the scope of this video. What's interesting about this situation is that whether or not the FTC considers this merger to be antitrust behavior depends on which factors they consider and what they find to be the most important. If they consider the banking angle, after this proposed merger, Capital One would be the sixth largest bank in the United States and the largest credit card provider in terms of loans. It could be argued that that will hurt competition for Capital One to be so large. However, in terms of credit card networks, Visa and MasterCard currently cover more than 80% of cards in circulation, while Discover has a much smaller share. If they successfully merge with Capital One and Capital One transitions some or potentially all of the cards that they had issued on the Visa and MasterCard networks over to the Discover network will become a much bigger player and have a stronger position against Visa and MasterCard, which are the currently dominant players, and that would help competition. There's no set timeline on when the FTC will make the decision about whether or not the merger will be allowed to go through, so for now we'll have to wait to learn more. Let me know if you have any questions in the comments below, and I'll see you in the next video. Bye!